SBG Securities is an institutional stockbroker wholly owned by the Standard Bank Group. And Justin Froneman, who's sector analyst at SBG, joins us in studio to chat about the Platinum Group metals market, including the underlying commodities and the recent market changes that have occurred in the platinum sector. Justin, we've been talking a lot about platinum in the last few weeks, but we forget perhaps that there are other metals which are called the Platinum Group metals. That we imagine them as smaller and more niched than platinum, but they're important too, and perhaps the demand issues there are different.
Yeah, absolutely. And I mean, I think it is an important discussion point, because a large reason for why the sector finds itself in the place that it is primarily because of price weakness in some of those associated metals, primarily rhodium. It is a system metal to these elements, and the PGM basket can be anything from 4 elements to 13 elements, depending on how you measure it. But certainly the main ones would be platinum, palladium, rhodium, a little bit of gold in there, and some base metals. And rhodium really has been the one, I think, that has probably disappointed most people. In the heydays, 2007 into the peak in 2008, rhodium peaked its price at $10,200 an ounce, subsequently lost 90% of that, and is still tracking at about an 85% loss from that level. So we just haven't had the recovery and generally across the PGM board that we've seen. And as I've mentioned, they've all got very similar drivers net, very much industrial focused, and I think that's obviously where a lot of the concern that you've seen has come through from.
Justin, can they switch between rhodium, palladium and platinum in auto catalysts, etc.?
Yeah.
Can you decide, rhodium's cheaper, let's get rhodium in this and build it? Is it?
That's exactly what has happened, David, over the last 10, 20 years. Because of rhodium's price volatility, it was always earmarked principally for gasoline auto catalysts. Is used for a different reaction, but without getting overly technical. Effectively, that's exactly what happened. The autocat makers said, this price volatility is just too much to actually bear. Let's go back in, let's use more palladium in favor of rhodium. And at the same time, you've had palladium making inroads on the platinum side of things. So you've really had this sort of triangle of platinum, palladium, rhodium being switched around as prices have reacted, as emissions legislation has changed. And as prices have really just dictated what the proverbial men in white coats actually do to these fundamental metals.
Well, some of them will come and take away people who've been investing in certain companies, the men in white coats. It sounds like a periodic table of the elements from the trick physics. It gets quite complex. If you stop mining platinum, you stop mining all the others as well.
Exactly right. They are mined concurrently. You don't go selectively mine a platinum ounce or a palladium ounce. You mine the basket, which is why you'll see, we refer to a PGM basket. We don't try and sort of specifically split out platinum, palladium, rhodium when we look at these companies in a lot of detail. We obviously do keep an eye on these metals, but certainly you're exactly right. I mean, they mine them as a basket of components, and that is what really dictates what their revenue looks like.
What dictates the demand for platinum? I mean, which specific area? To the layman, everybody will say to me, until Europe turns around, don't expect platinum to turn around.
Look, there is a very big sentiment issue associated with the metals across the board. I mean, and that's one of the reasons why the sector, which, South Africa still produces circa 70-75% of global platinum. How can you have an industry that controls that degree of the market burning the amount of money that it is? Approximately 40% of the industry is currently underwater on a free cash basis. So, how can you have that type of dynamic when you do control the metals? And it is a sentiment issue. 50% of platinum is still used in auto catalysts, and it's primarily diesel auto catalysts, which inherently means you link to the European auto sector, which obviously is not doing that well at the moment. But on paper, where you have had significant supply issues in the last 6 months, I mean, very well documented strikes and labor issues at Impala. You've now had shaft closures at Aquarius and Royal Bafokeng curtailing capital, East Platts putting operations on hold for the time being. Why has the price not reacted? And that really is the sentiment-driven trade that is coming through.
There are also psychological issues here. In a way that gold had a particular emotion. It founded the economy. It took us from agriculture and a backward sort of rural thing. Gold built Johannesburg, it built South Africa. Platinum became the blue chip commodity. This was the one that was going to drive the commodity sector. Lots of money, lots of community involvement in the old Western Transvaal benefiting and so on. Unthinkable a couple of years ago for gold to be higher than platinum in price. That's now become the norm.
It has. And it's something that we think is going to remain the status quo for a protracted period of time. We don't see the rand basket price, of these PGM elements really tracking anywhere for the next 12 to 18 months. And that really is the sentiment issue once again. from our analysis, we believe the automakers have forward bought the metal they need. So as a result, you haven't had the restocking that you've seen with other metals. So regardless really of what happens on the supply side, you really need a big supply shock to get this metal price back up to a sustainable level. And as a result, you're probably going to have this gold price, exceeding platinum for a sustained period.
Does every motor car produced in the world today have auto catalysts?
We're getting there. We're getting there.
Yeah.
It is an advanced curve, and it's one of the reasons why long-term platinum group metal fundamentals look extremely attractive, because you've got that inherent demand base. So yes, we've got issues in Europe, we've got issues in the US, which should be, naive to believe are going to clear themselves up in a short space of time. But the net effect here is that China is ramping up emissions legislation, and that's a key driver.
What's your sense of how the government will react? Because the government saw it as a cash cow, super profits, rather like Sasol when Sasol made those big profits. Oh, we've got to get some of this because it's our stuff that we're taking out the ground. We need some of it. Nationalisation, well, you don't want to nationalise something that's not working. How is government going to handle this? Because psychologically they've got to do a turnaround too.
Yeah, absolutely. And I think people oversimplify the issues at the platinum mining level. These are very complicated operations, very substantial and large operations. So to assume that the current crop of producers are doing a bad job, I think is false. I think they're working with probably the best that they can. And the continual noise around government's involvement and government wanting to put a super profits tax on and the like is creating a lot of investor uncertainty. And I think that's why you've seen the type of reactions you have in the market. We fundamentally believe there are other avenues which the government can look at. I think there's a very big disconnect between what you see on paper in terms of profit and EBITDA margin versus what is actually happening on the cash flow statement. And I think people generally forget that. These mines are very capital intensive, and as a consequence, you need a very strong EBITDA margin to justify staying in business, let alone charging a super profits tax. So if you bring a super profits tax in at anything less than a 30% EBITDA margin, this industry will crumble.
David, equities in this area, we've got Amplats, we've got Impala, we've got Lonman, Aquarius. Aquarius has said, Aquarius has appealed to the other producers, won't you also please cut back so that we can have a fair share?
It looks very ugly. If you look at the chart, I just, 2009, from end of 2009 or 2008 to where we are now, we've probably lost 40% in the value of platinum companies. Forget about going further back there, because it's even more. It's been quite distressing. And what we look for as analysts, as investors, for the bottom. We start to see, not where, we wait to see where support will start to come in the bottom. We haven't seen it yet.
No, you haven't. It's been the one sector where you haven't had, you just haven't had a recovery. And we've had continual margin compression basically from 2010 onwards. We've obviously had rampant unit cost inflation, which is extremely difficult to control in this environment. And that's just generally resulted in very poor numbers coming through. And unfortunately, we don't see that stopping.
But isn't the market working? There's an oversupply, and the suppliers are cutting back. That will reduce supply. Eventually, doesn't the market rectify?
Yeah.
Are there political elements there to say within the mines, knowing that if we start to close shafts, there's going to be mass unemployment in that? Do you think that's playing on their minds at all?
I think it's far, and I don't want to oversimplify Aquarius, in terms of what they've done, because I think they've made a very significant stand, which the market has generally appreciated. But certainly, you're right. For an Anglo Platinum or a Lonman to really shut down a big chunk of production, which is arguably what the industry needs at this point in time, really means that, you're going to have mass unemployment. There's also the read-through for the pricing itself. These guys realize that if Anglo Platinum shuts down 500,000 ounces tomorrow, prices will react, and now you're the person that's left carrying the can from a restructuring. So Aquarius as a standalone entity is smaller, far more easier to do those type of activities and those actions. Also had, up until yesterday, very much a contractor biased model, which allowed it to do that. At this point in time, this is arguably, from our standpoint, we're not expecting any more material cutbacks in the industry for that very reason, that it's an extremely difficult trigger to pull given the commodity roll-on effect that you have in this industry.